Not long to go now, Michael, until the federal budget on the 8th of May, and you've lodged a very comprehensive pre-budget submission. What are the key points in this submission, and what are you hoping to see in this year's budget?
Well, in view of the fact that it could be, or should be, Scott Morrison's last budget before the federal election, we put in a big effort this year, again banging the drum about the need for comprehensive tax reform, but I guess that's not going to happen in the current political climate. So we focused a lot on the personal tax cut issue. The Prime Minister and the Treasurer have flagged personal tax cuts. We're questioning whether that's desirable in the light of the commitment to get back to a surplus by 2021. And the issue there being that how do you actually provide a meaningful tax cut in the context of the constraints of the budget? Do you remember Amanda Vanstone and the comment that the tax cut that I think was provided in 2003 was only worth a sandwich and a milkshake? And there's this issue there about whether it actually makes much of a difference. But the submission contains a whole host of other ideas, mainly around fixing some of the problems that we see in the tax collection area, trying to figure out how we can improve compliance in the so-called black economy. We've made a lot of effort there to help the Black Economy Task Force. We're hoping that the budget will contain some of the ideas that Michael Andrew, the head of a Black Economy Task Force, has been working on. And that could be the surprise package in the budget in the sense of new revenue raising measures. So we'll see. We also raised a few comments about the regulation of our profession. The tax agent community is particularly concerned about all of these new players coming in to our patch. You've got financial planners and conveyancers and payroll providers. There's a whole host of professional providers of services, if you like, on the periphery of the tax agent regime. And the Tax Practitioners Board's been trying to figure out what role they can play and be registered at the same time. We think it's overdue for a review of the regulation of tax agents in Australia, and we said that in our submission.
Do you think Australian business has lost the fight for a lower company tax rate in Australia, Michael?
Well, it's looking that way, isn't it? Despite the best efforts of the Business Council, economists like Chris Richardson, we've had input from Dr. Ken Henry, all speaking in favour of company tax reform. The naysayers, I think, are winning the day. And politically, there's no appetite to pass the bill that's currently before Parliament, which would extend the existing company tax rate cuts to larger companies. So we're looking at a situation where there's growing concern about whether Australia's competitive position can be retained in view of what's happening in America and other countries with their company tax. There's also the issue about whether investment decisions might pass us by. So all of those things are on the watch list now to see what happens. And the politics is pretty poisonous as well. So in a sense, corporate Australia's lost the debate by not being able to contextualise what a company tax cut means for Australians. Where are the jobs? How many jobs? All these sort of practical issues. In what industries would there be more jobs? Where's the promised investment? Would any CEO put their neck on the line and say, yes, we would do this or that if there was a company tax cut? So it's regrettable the way things have panned out. It's not all lost. It could be that after the election and the politicking is all over, then maybe the debate will be reopened. But at this stage, it looks very unlikely.
Mm-hmm. Politics aside, it's business as usual for the tax system. What tax issues are currently front of mind for chartered accountants?
We're doing a lot of work with the ATO on single touch payroll. This is the new streamlined mechanism that starts from 1 July 2018 for employers who have 20 or more employees. It's designed to streamline the reporting of payroll information on payday, superannuation information as well. It will give the ATO contemporaneous insights as to what businesses are meant to be paying their employees, and also gives them a bit of a heads up if, having reported the payment information, the ATO doesn't see the actual PAYG or super contributions flowing into the right places. So that's very important. It's good for business. It will revolutionise the payroll function, but also provides a wonderful foundation for perhaps further enhancements in the future, as perhaps we can streamline more and more areas of payroll, work cover, fringe benefits, tax, reporting of basic statistical information about employment, gender equality reporting. You can see that once you've got a platform in place, it's quite expandable technology and could really take off. And it's a great opportunity for accountants as well, because they can think about how they want to provide these extra risk assurance services in an employment context. So that's one area. The other big area we're expecting is work-related deductions. Now, the Commissioner has some data which hasn't been published yet. It's called a tax gap report, the difference between what the theoretical tax take should be from individual taxpayers versus what the ATO is actually getting. And the ATO is flagging that it looks like it's a pretty big number. And part of that is because a lot of Australians, and with the help of some tax agents, it seems, are overclaiming their work-related deductions. So we're gearing up for a big education campaign come tax time 2018, the lead up to 30 June 2018. And if we can't arrest this trend, it's quite likely that the government of the day will say, well, that's enough. We have to change the rules here about work-related deductions.
Globally, what are the emerging issues in your advocacy work?
Well, the ATO is still out and about with their International Tax Task Force, looking at multinationals and applying the various new legislation that's available to the Commissioner, multilateral anti-avoidance rule, the diverted profits tax, and an ongoing focus with transfer pricing. So no let up in that area at all. And it'll be interesting to see how many runs the Commissioner can report next time in his annual report in terms of engagement with large taxpayers, and not so much in revenue raised, but whether he's convinced those taxpayers to change some of the more aggressive features of their tax structures to leave more revenue on the table here for Australia. There's also an interesting dynamic emerging with the United States. As you know, President Trump has somehow got through Congress all of his amazing tax reforms, and the idea now is to bring back to the United States a lot of the wealth that's been stored offshore by some very, very large US multinationals. And so the interesting thing about this now is that the ATO is more likely to have disputes directly with the IRS, and it'll be interesting to see how those disputes are resolved in terms of the so-called economic nationalism that is being reflected in President Trump's policies, not just tax, but now he's starting to impose tariffs and other things. So tax and trade are suddenly becoming quite intertwined, and it'll be interesting to see how the global tax system continues to collaborate when there's all this competition for the same piece of tax pie.
Thank you, Michael, for the update.
Pleasure.